thank you for joining us today. We're doing this home buyer webinar for you guys to inform you guys and share all the information we know with you. And we're super fired up for this because we love working with first-time home buyers, or even just giving you information. We've done tons of events like this before at schools for adults, and it's a great turnout all the time. So it's just great to help you guys out. So just a quick introduction. My name's Caesar, and I work here locally in Riverside for Berkshire Hathaway. And this is Darren Goldstein, my lender partner. He works with Cherry Creek Mortgage. And me and Darren have been working together now since 2017 now. And we've worked together with families, helped a lot of families, and we look forward to helping you as well. And our goal really quick is to, like I said before, and I keep saying, it's just, we want to give you all the information you need to make the best decision to purchase a home. Ultimately, knowledge is power, and whether you work with us or not, even though we would love your business, whoever you work with, we just want you to have the most knowledge, so nobody really has that power over you, or make you do something that you don't want to do. So we just want to give you all the information you need. Our second goal is to help you build wealth. It's no secret that most millionaires in America have been made through real estate. So real estate, for me, and I hope Darren shares the same opinion, I think it's the best way to build wealth. And as you pay down your mortgage, yes, you're paying a percentage to the note holder, but you're also building up equity. So all the money you're putting in every month into your house payment, your monthly payment, you're building up a huge savings account that, eventually you can tap into that equity if you want to. And lastly, we just want you to repeat this process. If you ever need to upgrade to a bigger house or downsize, you'll already have some experience on the purchasing process, and you could even pass this down to your kids and the younger generation. And just a quick overview of the whole process, just so you know. So when you're looking for a house, the first thing you want to do is contact a real estate professional like myself. We do an initial one-on-one consultation where we'll review everything you're looking for, pretty much, what kind of house you're looking for, 3 bedrooms, 4 bathrooms, 1 story, 2 stories. Do you need a bathroom upstairs? How many bathrooms you need? So all that, we go over that. And we also go over kind of just the process. I'll tell you all about the home inspection, contingencies, closing costs, escrow process. So all that is done in the initial consultation. And after you have that information, we do start the financing process. So I would connect you with somebody like Darren, who can help you out with the financing process. He'll go over all the programs you have. And even if you're not ready at the time of contacting Darren, Darren does a great job in putting you in a plan, whether it's a credit fix or saving a few dollars. He'll give you a plan so you can be ready as soon as possible. Now, after you have been approved by the lender, they give you a pre-approval letter. We can go out and start searching for homes. And this is very important that you have the pre-approval letter, because you don't want to miss out on any homes you really like if the financing is not in place before searching for a house. And then after that, your offer gets accepted. We reach an agreement with the seller, and the escrow process starts. This is where we'll do the home inspections, we'll do the appraisal, we'll make sure to negotiate any things that need to be fixed with the house if you aren't happy with that. And once all that is agreed upon, all the repairs have been made, all the inspection, appraisal, contingencies have been removed, then you're a homeowner. You get the keys to your house, and that's the end of escrow. That's a time to celebrate. We'll bring some champagne to your new home. And now I'm going to pass on the baton to Darren, so he'll talk about all the loan programs.
Thank you, Caesar. Thank you. So thank you for joining us today. We're so grateful to have you here and to spend time with us. We can help educate you. Caesar covered all that perfectly, that blueprint up front. And I can first off just say that I work with a lot of realtors, but Caesar is not only a partner of mine, but a friend. And that's really because he cares about people. He goes the extra mile for his clients. So I just don't work with anybody else that's more authentic and really will fight tooth and nail for his clients. So, and I've witnessed that firsthand. So I'm grateful to work with you as well, Caesar. So with that said too, really what we're going to talk about today is we're going to cover what you have to do to obtain financing, what that process looks like, what kind of loan products are out there, just a topical kind of overview of everything to help you guys understand what's going on. We're going to talk about Caesar and the VA program. We're going to talk about what kind of documentation you need, and just really what it looks like. A lot of people think, you know, up front, it's this kind of scary process. And although it's a big deal, you know, really the key word, you know, like Caesar said earlier, is you want to work with people you trust. You want to work with people that you know are looking out for you, because it is such a large transaction and a big deal in your life. So all the stuff we're going to cover today is all the things you should be looking out for all the questions you might have after we're done. We're definitely going to be taking questions from both of you. And we just want you to feel confident every step of the way to make this work. So I'm going to start off with, I'm going to share my, let me see here. Is it on, Caesar?
Yeah, you're good.
There we go. It should be working. Are we good now? Okay.
Yeah.
So basically we're starting, you know, I work for a company called Cherry Creek Mortgage. We're based in Riverside. It's a great company. Basically, we funded over $51.8 billion last 2018. And I know that I believe it was at 59 billion last year. We have over 800 employees, 32 years of service. We are a national company, but I'll tell you why I love working for this company, because although we're national, we are not so big that you can't get a hold of us on the weekend. Caesar as well. You know, when you're purchasing a home, it's not Monday through Friday, it's 7 days a week. So basically when you're going, sorry about that. Told you that might happen. So it's 7 days a week. So the point is we are here for you through the entire process. And the thing also about our company is we can get anybody on the phone inside of our company. So if we need to talk to, you know, anybody that's working on your financing and your loan during that escrow period, we can get them on the phone and reach them. So we are backed in a major company. We're direct lenders, so we work with all kinds of different investors. We fund our own loans. But the thing I love about this company is everybody is available. You know, we're not so big like some of those big banks where you call and you got to wait 3 days to get a call back. So those are the kind of things that we'll do. So the first thing I kind of want to get into is, you know, breaking the myth of, you know, what might keep you from purchasing a home. A lot of people think, you know, I may need 20% for a down payment. I don't have, you know, 20% to buy a house. It's actually, that is myth number one. So there are programs out there that have as little down as 3%. There's even programs that are out there that are 100% financing. Currently, given our, you know, current landscape with where things are, some of those 100% financing programs are not available right now. But point being, this is why we're doing an event like this, is we're all about long-term planning. So those programs are going to come back and we can definitely talk about those. But the point is you can purchase a house with way less than 20% down. There's even ways we can structure it where, you know, when Caesar writes an offer for you, you can get money from the seller, the person you're buying the house from, to help you get funds to purchase the house. We can talk more about that, you know, either on a phone call afterwards or whatnot, but there are ways to buy a house and not pay 20% on your down payment, okay? Myth number two is going to be, you know, I need like a 740 credit score. I need to have great credit. You know, as you can see in this chart to the right, you know, basically most of the loans that are out there, more than 50% of the loans that are out there are credit scores between 650 and 699. There are programs out there where you can do, you could have a low 600 FICO, and pre-COVID times, even in the high 500s, you know, where there's ways you can get a loan. Credit scores have a lot to do with determining pricing, your interest rate, things like that. We'll get into that more later. But the thing is getting rid of these two myths, basically what it shows you is there are options for you out there. And also given with the credit scores, as Caesar mentioned, is we are committed to working with you. So if I run your credit, or if I talk to a client, let's say they have a 600 credit score, what I have the ability to do is take that credit report, work through it, plug it into a system, and I can basically figure out how many points we can get to raise your credit score, put together a plan for you in 1 month, 2 months, 3 months, however long it takes to get your credit score in the position to where you can purchase a house. So the point being with these two myths is that don't let what you're thinking hold you back, and don't be afraid to talk to someone like Caesar or myself, because it's our job to help you. It's not just about getting you to buy a house. It's not just getting you to get your financing right away. It's about having you be comfortable and work a plan to help you through that. So that's just kind of one way to think about credit score and down payment. Loan options and overviews. And I can't see the comments, Caesar. I don't know if you can. So if anybody types anything, let me know.
Yeah,
but
I got you.
I can't see them right now. So any questions so far, let me know. And then Caesar will let me know. But if not, I'll just keep going through. So loan options. There's a few different options out there. There's what's called a conventional loan. These are basically government-sponsored enterprises that basically they will invest and back the loans that we do. So conventional loans are basically, you can go as low as 3% down payments on a conventional loan. And then I'm going to get into the comparisons pretty soon too. So a conventional loan versus FHA, which is the second. So basically the FHA loan is backed by the federal government. So an FHA loan is 3.5% down payment. Now, these are the two main loans that you'll see along with VA. USDA loans are rural area loans. So we don't see too many of those unless you're buying in mid-country somewhere, out in rural areas. However, I want to get back to conventional FHA. So let's say you have a credit score of 740 or 720 and above. Okay, a conventional loan is going to be probably a better loan for you because, like I said, your credit score has to do with pricing. So conventional loans, higher credit scores are typically better for conventional loans because they'll give you better interest rate. They're better options for what's called mortgage insurance. So mortgage insurance is anytime you put less than 20% down on a house, part of what your monthly payment is called mortgage insurance. And so conventional loans have better pricing, which means lower costs for you monthly by having like a 720 or 740 and above credit score. Where FHA is, let's say you have a 620, 630, 640 credit score, it is going to be better pricing. So they're more forgiving and it's actually a better deal for homeowners at that point. It's a really good way to do it. The main difference between conventional and FHA is that FHA, the mortgage insurance is on for the life of the loan. For conventional loans, once you get to a point to where you have 20% equity in the house, meaning your value has gone up and you're paying your loan down and you have 80% loan to value. So it automatically falls off. That mortgage insurance falls off. For FHA loans, they are on for the life of the loan. And as your mortgage advisor, I'm constantly, even after we close the loan, going to be reviewing your loan annually. And I will be calling you and letting you know, hey, you're in a position where we might be able to refinance you and save you a couple $100 a month for the rest of your life on the mortgage, because we can take you from an FHA loan to a conventional loan. So those are kind of the basic differences between conventional and FHA. VA loans are great. Talk about mortgage insurance. For VA loans, there is no mortgage insurance. There is also 100% financing, which we'll get into a little bit more. Those are basically the main differences between those. So when we're talking to a client and I find out what your credit score is, when I find out how much money you have to put down, on the house, one of the things that I'm always going to do as your mortgage advisor is compare. I'm not just going to go, oh, let's do an FHA loan. Oh, let's do a conventional loan. One of the things that I'm going to do is I'm going to say, let's look at all the options. What does an FHA loan look like? What does a conventional loan look like? What's the difference? We'll go over that difference, and whatever kind of gets you the lowest monthly payment and less money out of pocket, that's really what's going to help you most. And we'll review all of that. So those are the main differences between conventional and FHA loans.
Hey, Darren.
And we'll get, yeah.
Caesar has a question. He said if it's the same thing with the conventional loan as the VA loan. And Caesar, maybe you can clarify, are you talking about the mortgage insurance with VA loans? Yeah, so is there mortgage insurance with the VA loans?
No mortgage insurance. No mortgage insurance for VA loans. And I'm going to have a whole slide, Caesar, on for VA loans. I'm actually going to have a couple slides on that and get into that a little bit more. But yeah, no mortgage insurance on VA. So yeah, and really, you know, conventional loans, like I said, in simple bullet points, conventional loans are going to be more apt for, see, that's the thing, is they offer conventional loans for a 3% down payment. But what lenders don't tell you is that part of your interest rate is determined by how much you put down on a house. So if you do a 3% conventional loan, the interest rate might be way higher than if you put 5% down on a conventional loan. Or if you put 10% down on a conventional loan. You know, 3% is not great for interest rates. So a lot of times if I'm talking to a client and they say, hey, I've got 3% to put down on a home, maybe we'll look at doing an FHA loan because that's 3.5%. So that's going to help them out a little bit more. And the pricing is going to be better. You're going to get a way better interest rate by putting down 3.5% and doing FHA instead of, the interest rate might be 3% or 2.75% right now for FHA. But if you do 3% on conventional, it might be 3.5% or 3.75%. So the point is I'm not trying to swarm you with information, but I want you to kind of understand how it's my job to be looking out for my clients and kind of comparing the difference and showing you the difference to work through it. Okay, I hope that makes sense. FHA loans, you know, they are basically for first time. A lot of lenders call these FHA loans like first-time homebuyer programs and things like that. It's just a great way to advertise, right? Really, an FHA loan, you don't have to be a first-time homebuyer. You could own a home, have an FHA loan, sell your home, and purchase a new home right away and use an FHA loan on that new home. So really what they mean by first-time homebuyer programs is just it's low down payment. That's really it. It's available for 1 to 4 unit properties. So you could buy a duplex, a multi-unit, put 3.5% down and rent out one of the other units. And that would be very beneficial. We have a lot of clients that have done that. For FHA loans, you can also do gift funds from family members, you know, to cover the closing costs and the down payment. You can also have qualified non-occupant co-signers. So basically, if you need help qualifying for the payment, you can have a co-signer anytime with that. So yeah, I mean, there's basically, and the last bullet point there is kind of what I was talking about. So there's flexible credit qualifying guidelines. So meaning if you have, you know, a 620 or a 630 credit score, where it might be really bad pricing wise for a conventional loan, that's why we would look at FHA, because it would be a better deal for you as the consumer with the lower credit score. They're more forgiving by that. Okay. Yeah. So basically that's basically the lowdown on FHA. We're going to get into more of like the financing options and kind of what is closing costs, what's prepaids. You know, this is a slide from a different part. We are a national company. So the loan amount was 132. This is just a slide. We'll get into a more relevant slide a little bit later. But there's different kind of programs out there. There's 30-year fixed, there's 30-year fixed with PMI, and then there's the USDA loans. Well, I'll clarify a little bit of that later. Now we'll get into VA. So definitely, this is a great program as a thank you for all of our veterans that have served our country. And it is one of the best loan programs out there. Like I said, on this slide, there's no down payment. You can do 100% financing. There's no mortgage insurance. Remember, we talked about if you put less than 20% down on a house, there's what's called mortgage insurance. No mortgage insurance with this. There's a funding fee. So basically, depending on how many times you've used your VA loan, there is a funding fee that's charged, with that. But again, this is charged to you, not out of pocket. It's financed. So again, you don't have to put down any money to do this. It's low interest rates. It's kind of in the same department as FHA. So FHA is super low interest rates right now. There's also, basically the eligibility factor of it is minimum of 90 days, active military, honorable discharge. Basically for reservist members, 6 years with honorable discharge, or 60 to 180 days of active duty. Surviving spouse of veteran who died during service and has not remarried. And so again, and this is we do a lot of these loans for our veterans, and it's just, there's no better deal out there. Rates are super low with them. And definitely we can talk to more about that if you have any questions, Caesar. If anybody has any questions so far, let me know.
Do these have to be owner occupied?
Yes.
Okay.
Yes. Yeah. So basically, yeah, owner occupied, and pretty much you could do that. You could use the VA a second time. The funding fee is a little bit higher for the second time. So you could have your home and then purchase another and do that. So that's definitely something you could do. And if you have any more, if Caesar has any more questions too, obviously we can field more after that. Same thing with credit scores on VA. It's a lot like FHA. So basically, what you'll have in there is, it's lower credit, it's more forgiving, and the rates are better with lower credit scores. There's also jumbo loans out there. Really, jumbo loans, you can do loans amount up to $2 million and more. We could get into kind of the weeds on certain things, but what means a jumbo loan is, so a conforming loan amount. When you hear an ad on the radio out there, and they say, hey, interest rates are 3%, and we got all these programs and this and that. When they're quoting rates, they are quoting a rate based on what's called a conforming loan amount. So $510,400, anything that and lower is what's called a conforming loan. So that's kind of what they're referring to. When you hear those quotes on the radio, it's like 740 credit score, 510,400 and lower is going to be that. And basically that's the kind of pricing they're using for that. Anything over 510,400 is going to be what's called a jumbo loan. And we can get into more of that, but jumbo loans are also there. We have programs for that as well. There's also specialty programs out there, for borrowers designed with unique needs, this is like an FHA loan, 203K. So let's say you're out there looking for homes and, you're approved at 315,000 or 350,000 or whatever it is. And you're looking and you just can't find the right home. Like you walk in, the kitchen doesn't look exactly right. You don't like the counters. Maybe you want new floors or whatever it might be. This is a program, the 203K loan by FHA, where you can actually get a grant up to, it basically adds to your loan amount of $30,000. So basically what you can do is you can walk into a home, you can go, I love this home, it's just not the way I like it. You can't change the structure. You can't knock down walls and change the roof and do things like that. But what this is a program out there for is you can get up to about $30,000 to redo your counters, floors, and things like that. It's a great program. We've helped a lot of clients with this. Even, like I said, there's programs out there that are 100% financed. Right now, due to COVID-19 and kind of what we're going through, the landscape of what we're dealing with as society right now, a lot of these loans have disappeared right now. Doesn't mean they're not going to come back, but pretty much what these programs are is based on a certain minimum credit score and certain, your bills and the house payment, it can't be over a certain ratio. These programs out there can offer you 100% financing. So basically it would cover your down payment and most of the closing costs. And then the difference we could have the seller cover, you know, or we could work through those. But these programs are out there. I mean, I got a client, I mean, we've helped lots of families out there. Like, I think before the end of 2019, I had a family buy a $350,000 home. They brought in $0 and they had a low interest rate. So they were able to buy a home with no money. And it was awesome. Another family, I raised their credit score. We worked for about 6 months. We took them from about a 620 credit score to a 680 credit score. They purchased a $400,000 home. They brought in $3,000. So there's options out there. And that's what I was kind of saying earlier is that, you know, we're committed to helping you. And it's not about, oh, if you're not ready now, forget about it. You know, the point is we are committed to go the distance with you, to put together a plan, to work on your credit, to talk about all these programs and what benefits you the most and work together to do that. So there are things out there. We also do what's called a reverse mortgage. This is for seniors 62 and older. You know, basically this is a program where if you have about 50% equity in your home, meaning your loan to what the value is, there's an option where you can refinance into what a reverse mortgage is, where you'd have no principal and interest payment for the rest of your life. You can also have no principal and interest payment, and at the same time pay yourself monthly off your home's equity, meaning the value you have in your home. So that's a great program out there. If you have more questions, just let me know, but it's a great way to help people. And so, you know, obviously a mortgage is a big deal. You know, like I said, this is not a 5 days a week thing where, you know, you can only reach me or Caesar, you know, office hours. We take this very seriously. It's a big deal in your life. And we are committed to helping you through the entire process, from the planning in the beginning to, you know, working through getting you pre-approved, to the offer being accepted, and all the way through the whole escrow period, which I'll kind of do a brief overview of what that looks like, you know, before we finish. And if anybody has any questions, please let me know. I can stop at any time, Caesar. Just, yeah, if you could read them to me. So payment assurance program, we offer a program where basically, let's say after you close your loan, something happens, you lose your job, you know, and there's hardships that you have to deal with. There's a program that we offer through Cherry Creek Mortgage where basically we will help you cover a certain percentage of your mortgage payment for up to 6 months and a certain dollar amount. So we are out there. We have your back, and we want to help you get through those hardships. I can tell you more about that if you have questions. So now what I'd like to do, just as we're nearing the close of the presentation part, but what I want to kind of go over is, what does it look like when you want to purchase a home? And so basically this is how it would work. You meet somebody like Caesar, or you talk to Caesar, hey, I'm thinking about purchasing a house. Caesar would then mention, hey, go ahead and give my lender a call. So basically what we do is we have a quick 5-10 minute long conversation where what we'll do is I'll ask you questions about your income, what your debt is, what your credit score looks like. And we'll talk about, you know, all those things. The more I know about you as a home buyer, the more I can help you through options and put together, you know, kind of a customized plan to make sure that we get you the best financing that fits your needs. So we have that basic conversation, then I send you an email. And what you can see in this slide is what do you need then after that conversation? So basically, if you're a W-2 employee, all we would really need is 2 years W-2s. You know, we would need most recent pay stub for the last month, bank statements to show your money for purchasing a home. and driver's license, just simple things like that. It's a short list based on kind of what we're talking about. If you work for yourself, if you own your own business, what we would look at is your tax returns and your what's called your Schedule C form. So if you own your own business, so I'll pause for a quick second. If you work for a company and you're a W-2 employee, we would work off your gross income, not your check after taxes come out. We would look at how much you make before taxes come out. Okay, that's your gross income. If you own your own business, what we would look at is your net income. So what's on called your Schedule C form, we would look at, after all your write-offs, what that net income is. Now there's ways we can add stuff back in to that net income. We would just have to see your tax returns to do that. So that's kind of basically the basic requirements for it. And then I would send that, and then I would run your credit, start a loan app, and then I would call you back and we would go over, hey, based on your credit, based on looking at your pay stubs, based on what we're seeing, these are a couple different options that I think might work for you. And then what we do is we talk about that. Once all that's figured out, then comes the fun part, right? The fun part is really, me issuing you an approval letter and CCing Caesar on that. And then you guys are out looking for your home. When you start looking for homes, basically what you'll do at that point, and what Caesar will do, is just kind of email me or text me an address that you're going to go look at. What I'll do is I will look up, before you walk into that home, I'll let you know what the payment's going to be, what your cash to close is. And basically, you'll know going in that house, is this something that I feel comfortable with as far as the monthly payment goes? And is this comfortable with how much cash I'm bringing in to close? And that's really that whole first pre-qualification, pre-approved moment. And that's kind of it, right? I mean, anything that I left out, Caesar?
No, you covered pretty much everything. If you could just go back to the slides of the requirements, just in case anybody wants to take a screenshot or just a quick picture of the.
Yeah, of course. Let me see. There we go. Play. Got it. So yeah, so income wise, basically what we'd be looking at is, let's say you work for a company. We would require, 2018 and 19 W-2, most recent 30 days of pay stubs. So last month worth of pay stubs. We would look at your bank statement, most last 2 months. Okay. Another thing is for down payment. I talked to somebody the other day where basically what they mentioned was, hey, I've got about $30,000 for a down payment to purchase a home. Okay. So I asked them, okay, so where is that? Is that in a checking account, savings account? They said, no, it's in cash under my bed. So, and that happens. We get that call a lot. So you cannot use cash straight from under your bed to purchase a house. What it has to be is what's called seasoned. So it has to be sitting in your bank account for at least 2 months, because we require 2 months of statements on that. So basically that's, and there's ways to kind of work through things like that, but that's kind of one issue that comes up sometimes. That's it. As far as, yeah, I mean, well, that's it as far as documentation goes. I don't want to get too far ahead of myself with that.
Yes.
Yeah. And so also, like, let's say you work part-time, right? Or let's say your hours kind of change. Another thing we'd ask for is maybe your last pay stub from 2018 and 2019. The reason we would ask for that would be because we could kind of take an average. If your hours kind of fluctuate, we would take an average between the years and where we are now to kind of figure out the best thing we could do. This I can tell you is a lot of times what'll happen is, I'll get a call from somebody and they say, hey, I talked to Wells Fargo, or hey, I talked to this company and they told me I could buy a $400,000 house. And my realtor wrote the offer, and now they're saying because it's in what's called underwriting, we don't qualify for the house anymore. And so basically what that bank or that lender did was they looked at their stuff. They didn't look at it deep enough. They didn't ask the right questions, and they didn't do their work ahead of time. So they kind of guessed. They said, hey, you can buy this house. And what turned out, they actually could not buy that house. What we'll do in the beginning is we do all that work ahead of time. What I'm going to do when I'm looking at your tax returns or your pay stubs or whatever it might be, we are going to do all that due diligence work ahead of time, because we're never going to guess. I am never going to go, well, I think that they can buy a $350,000 house. Go ahead and write an offer, Caesar. You know, what I'm going to do is, if it's questionable, if there are things that don't add up exactly right as far as the numbers work, I'm going to call my underwriter, and I'm going to call them and I'm going to say, hey, how would you look at this? Am I looking at it the right way? So that way, when I tell you that you're qualified to buy that $350,000 house or whatever house that might be, you don't have to worry about it. You know, we never guess. We never guess. It's our job as a loan officer, as your professional real estate professional, to know what you're doing. So when you do it, you can feel confident you can do it, right?
Yeah, and that's important, because we've seen it on the other side of the transaction when we're presenting a seller that, you know, there's times where the other mortgage company won't, you know, follow through, and, you know, the loan won't be funded last minute. So this has never been the case with Cherry Creek Mortgage, and it's great to work with a company so reliable like that. And then Darren, Kiona asked, could high student loans affect my chances of being pre-approved?
So yeah, and I see also is FHA for first-time buyers only. So great questions, Kiona. Student loans can affect what you qualify for. So let's say you have, you know, $30,000 worth of student loans out there. But let's say you're in deferment. So let's say you're not paying those, right? That it's in deferment for a year, however long it might be. For FHA loans, they would take 1% of the outstanding debt. So $300, right? So 30 grand, $300. So basically, that's how they would do that. So yes, it could potentially affect it. However, with FHA loans, I don't want to confuse and get into the weeds on some stuff, but basically, so what's called a debt to income ratio, okay? A debt to income ratio is a big deal in financing and when you buy a house, right? So for conventional loans, I'll back up for a second. Debt to income ratio is what your house payment is going to be plus what all your monthly debts are. So monthly debts don't mean your cell phone, doesn't mean your electric bill or your car insurance or anything else. What we consider in monthly debt in your debt income ratio is going to be your car payment, minimum credit card payments. So let's say you have $1,000 worth of debt on your credit card and you pay $400 a month. I would not count $400 a month. I would count whatever the minimum payment is, $25, $30, $40, whatever it would be. So those kind of debts, student loans, right? 1% for an FHA loan, 1% of the outstanding debt. So we take the proposed house payment plus all the debts you have divided by your monthly income. And that gives us a percentage. That's called your debt to income ratio. And for FHA, you can go higher. You can go up to 55%. So that you can qualify for more house and have more debt for an FHA loan. Conventional loans, however, lower percentage, almost like maybe 47, give or take, maybe 48. It's really whatever we can get the approval at. Once we type in your loan information and we get everything there, we run what's called an automated approval. And really for a conventional loan, it's lower than FHA. It's not 55%. Maybe it's 47. You know, it just depends on your credit score. It depends on your whole blueprint, basically how that goes. And that's kind of the difference. So I hope that, however, to Kiona, back to your question about student loans. For conventional loans, we would take, let's say you have an agreed payment based on your student loans, based on your salary. So let's say like you have 30 grand worth of outstanding student loan debt, but let's say you know, based on your salary and where you're at, that payment isn't $300 a month. Let's say it's $150. For a conventional loan, we would be able to take that lower payment of $150 and right, that's a better deal in that way. All right. So that's kind of, so when I'm looking at, you know, my clients who have student loans, I'm always kind of comparing. I'm going like, okay, does it make more sense to do conventional, or does it make more sense to do FHA? Like if I, you know, it's you find the sweet spot between the two and you review that. I hope that answers your question. And for FHA, it is not for first-time buyers. When you hear lenders doing ads and saying, hey, we got great first-time home buyer programs, it's just an ad. It's just something they do to try to get their phone to ring. Really, FHA first-time home buyer, it doesn't mean that. You can own a house, have an FHA loan on it, and then purchase sell that house. You can't have two FHA loans. There are rules and things that you have to be like 100, that homes have to be 100 miles from each other. It doesn't happen often. You're not really allowed to have two FHA loans. But if you own a house and have an FHA loan and sell it, want to buy another house with an FHA loan, you're good to go.
Yeah. I also thought it was worth mentioning with the whole debt to income ratio. When people tell us that they're thinking of buying or purchasing a home, a lot of the times we tell them to absolutely not get a car loan, because that will, you know, significantly reduce your lending amount that you can borrow for a home. So just keep that in mind. If you're thinking of purchasing a home in the near future, try to avoid getting into any debt, any monthly debt, at least until you purchase your home and you're done with escrow.
Yeah, that's a great point. I mean, basically, the way we like to break it down is every $60 worth of debt that you have is roughly $10,000 in sales price. Yeah. So let's say I talk to you and we look over your income information, we run your credit, we do everything, and I say, hey, you're approved for $350,000, okay? And let's say you're looking for homes, and then you call me up on Monday and you're like, hey, we had a great weekend. We got a bunch of, you know, we're so excited we're going to buy a house. We bought a bunch of furniture and we took a loan out, and that payment is about $120 a month. So what that would mean at that point is that you would go from $350,000 to $330,000. Taking on $120 more debt a month would lower your sales price by $20,000 for that. So that's something to think about, you know. Another kind of rough way to think about, hey, what's a house payment? Like, how do I know what a house payment is? Remember, this is a very rough numbers to go by, but roughly it's about $6.75 for every dollar, you know, depending on what sales price you're looking at. I always like to say just $7 for every 1,000. So if you want to know kind of, and I'm just going to do a little math with you right here, but like, let's say you're like, I wonder what a you know, a $400,000 sales price, what that monthly payment's going to be. You would do, you know, 7 times 400,000. It's about a $2,800 payment. Now that's a little bit high because rates are lower. It's probably more like $2,500 payment, but that's kind of a good way for you as a consumer to kind of think, hey, I wonder what that payment's going to be roughly within a few $100s or so from.
Yes, that's good stuff. And last thing, I think it's also worth mentioning, it's important to listen to the lender, or in this case, Darren, if, you know, he's helping you out with credit. We did have that one instance where that client, those clients we were working with, that couple, you gave them a plan to fix their credit, and you know, they wanted to buy a home very quickly, and you told them not to get any sort of loan, and the guy went out and got a jewelry loan, and that kind of messed up his chances and the timeline to purchase a home. So it's important to follow through with what Darren instructs.
Yeah, well, and look, at the end of the day, we work for you. I mean, we work for you, our clients. And so it's just a huge part about putting together that plan and sticking to it. I get it. Life happens and things go on. Our job is really to present options for our clients. And really, there's no cost for that. I mean, there's no cost really. And to kind of dig a little bit deeper in how we fix credit is we're not a credit repair company. A lot of times credit repair companies, I've heard nothing but bad stories about those. You know, we even help people. So another kind of credit info is you cannot purchase a home if you have any disputes on your credit. So if, let's say you disputed with, you know, AT&T, or you disputed with Verizon or something like that, you have to remove that dispute in order to get financing to purchase a home. So what we'll do is I'll work with a lot of clients where after I run their credit, I see they have disputes. So what we'll do is we'll type up letters for our clients, get them to sign them, send it in, and get their disputes removed. And that helps them get into a home. Another thing too, which is very weird with credit and how it works, is like, so a lot of times as I'm playing with a credit report and how we can look at a timeline to improve credit, if I show, like, let's say there's a credit card and there's $1,000 owed on it. If I make that balance $0, the credit score might not move any points for 2-3 months. However, if I leave a $10 balance on that credit card, it might move 30 points up. And it's a really bizarre thing, but it's kind of the idea behind, you know, the way the credit bureaus work is they want to see that you have a little bit of debt, not a lot, but a little bit. So you're utilizing credit and you're doing that. Another thing we could do sometimes, I just had a client yesterday where, you know, their score is 630. We need their score to be at about a 680. So I was playing with their credit, doing everything I did. I put them on as an authorized user on somebody else's card that pays off their card every month, and their family, mom, dad, brother, sister, wife, whoever it was that they ended up going with. So if they became an authorized user on that card, it gave them 30 points, right? Immediately. So there's ways that, again, how we're committed to helping you through this process, that's what we're going to do. The other cool thing, you know, that I know that Caesar does so well is when he's looking for homes for you and we're getting ready to write an offer, right? So we've talked about income, credit, how we look at things, specific programs. You know, one of the things is as soon as you find a house, you're like, this is the house, we want to write an offer, right? Caesar's going to write up that offer. He will instruct you all through that and help you through that. Once Caesar submits that offer, I am going to call the listing agent, the person that's selling the house you want to buy, and let them know, hey, this client is highly qualified, really excited. We have a complete file. We have all their documentation and information, and anything you need, we're here to help you. And that helps because I don't know if you can elaborate, Caesar, but the one thing that will help your offer get accepted, one of the most important things is the listing agent wants to know that you can obtain financing, that your loan can actually close. Am I right in that, Caesar?
Yes, absolutely. And, you know, me and Darren work a lot together when writing offers. And we tell our client specifically before we even go see the house, how much their monthly payment would be with that house, how much their taxes would be with that house. So the client already knows and is confident that, you know, they'll be able to handle all those payments, the monthly payments, the mortgage, the taxes, and all the costs involved with the purchase of the house. And yeah, our offers do tend to get accepted more than others because we're very good at what we do and we're very thorough. And I do my job to do the research on the seller and the other listing agent and make sure that they feel confident in our offer.
Yeah, I mean, it's so true. And the best part, you know, and what's so amazing about, you know, what I know, like what Caesar and what all realtors do is you as the buyer, you do not even pay Caesar. The seller pays the buyer's agent, you know? So, I mean, it's our commitment to helping you not just get into a house right away or doing this. It's our commitment to helping you do it when it's right for you and working overtime to do that. You know, I don't know. Does anybody have any other questions? I know we've covered a lot. Caesar, I saw that you left your number over there, and we can definitely talk more about the VA program and how it works. And then Kiona, awesome. So that's good. Perfect. Too. Does anybody have any questions as far as after any of that stuff goes on? Like anything we haven't covered?
That's good stuff.
Yeah.
Well, we want to say thank you guys for joining us. This is the first time we do this in the online only version webinar. We've done plenty of events before, like I said, at schools and whatnot for parents and adults. But we are planning on doing this every quarter. So, you know, if you know anybody in need or anybody that could benefit from this information, please let us know so we can send at least an invitation and they can join us at our next online event. But we'll keep you guys updated as well whenever we have another one. So thank you very guys for joining us and spending this time to learn about home buying.
Yeah, thank you. And thank you, Cesar. I mean, it's a pleasure to spend time with you guys. And, you know, we are going to be doing this more. And please just let your friends know. And the one message I think I would like to get out there is that this is not a scary thing. You know, I am not the police because I'm a lender. And really, it's not as big and intense trying to figure out what you're able to do. Look, I've got people on 3-year plans, on 2-year plans. So it's just such a good thing to know what the picture looks like at the end, you know, and it's just good to have that conversation. So definitely. And I see your message too, Cesar. I will definitely text you over the link for the app. And we have online application forms, and then also, you know, I can do that as well over a private phone call with you. So yep, that sounds good. I'm actually just going to take a picture of I don't know if it saves all this text stuff or not, but I'm just going to take a quick picture so I'll have it.
I have the information.
Thank you so much.
Well, thank you guys. Have a great evening, and hopefully we get to meet you soon when this is all over. Take care and stay safe.
Thank you.
Give me every time.